Hello everyone, my name is Matthew Frailey, founder of BreakpointTrades.com. Founded it back in 2003 to bring you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms, such as our 21 SPY and ES mean reversion systems with about 90% winning trades. And of course, most recently over the last year, our KISS trend following systems. Nothing out there like it. At the moment, you can still view it, the public. We're soon going to lock that up. Amazing resource. You need to check it out. But anyway, let's go and get back to this video. This is our back-end recording. I'm going to go ahead and start my newsletter now. Hello, everyone, and happy Monday. This is the BPT newsletter on the markets and our trading systems, and it's January 29th, 2024. As you can see in the newsletter, this newsletter is divided into 6 major sections. By the way, I did add some new trade ideas. And guys, honestly, as far as the market, really nothing to say like a broken record. The trend remains up. So follow the trend. On the weekend newsletter from Sunday, I discussed my thoughts that the market would push higher. The Russell 2000, for example, had a perfect coil pattern, inverse head and shoulder pattern. That broke out in a big ray. The Russell today was up 1.75%, so it outperformed. The S&P was up about 0.75%. Qs were up 1%. And we follow 21 market sectors. So today was a broad-based rally. 20 out of 21 sectors were up. So fairly broad-based rally. KISS systems continue to knock it out of the park. They continue to be long. Many instruments raising the stops. For example, the KISS system for the S&P raised its stop really nicely today. And really nice to see that. Anyway, as far as the market, like I said, I do think we're going to have some sort of correction sometime this year. But at the very moment, and as I discussed on the weekend, we're in earnings season. You know, the next couple of days, we have all these major large cap tech stocks reporting. Google, Alphabet, Microsoft, AMD report tomorrow, and Apple, Meta, Amazon report on Wednesday. So with that, with the FOMC, with the jobs report on Friday, I just don't see the market having any pullback. And in fact, it rallied nicely today. The S&P had a nice ascending triangle, which broke out. These are the key events for the week. Like I said, all these earnings reports, tons of other ones. On Wednesday, the big one is the FOMC decision. And on Friday, it's the job non-farm payroll report. Next. So before we get into the market analysis, I just want to go over these KISS systems once again. So when I looked at our system, about 350 of you came here and set favorites and are getting email alerts automatically. There's many more members on the website than that. So there's a huge number of you that have not done this yet. I don't know if you're not aware of the KISS systems or you just haven't come here, but I highly suggest you go to the KISS systems section, go here, set favorites. You set favorites by clicking on the stars next to the symbols you want. There's a favorites tab on the far right side. There's a box there that you need to check. Receive alerts about your favorite instruments. So if you've selected Apple, SPY, Microsoft, whatever it is, whenever there's a change, whenever the system takes an entry, it'll send you an email. Whenever it generates a new smart trailing stop, it'll send you an email. And I'll show you an example of that email. But again, less than half of the subscribers on the website have set their favorites. So you really need to do that if you haven't done so, because you're missing out on a very valuable resource. And anyway, this is the favorite section for me, and you can see some of these amazing gains. CrowdStrike, which I discussed on the weekend, it's now 94.8%. The system went long on 8/21, and that's not curve fit. It's been live on the website. That's when it went long. And since that time, it's raised its stop 23 times, which is pretty awesome. So no matter what happens, that trade is wildly profitable for anyone who might be following that. Current smart trailing stop is 272.40. It had moved up from 269.90. And you could see some of these others. Here's UPRO, which is up almost 40% from the entry on November 3rd, etc. Next. Image number 3. So here's an example of what the emails look like. So this is taken directly from my Gmail account. And these are what the tables look like that automatically get sent to you from your favorites. So here's the one today: S&P, Amazon, CrowdStrike, FNGU, NVDA, SSO, TQQ, and there's more. It's cut off here. But these are all the ones that generated new smart trailing stops, and it sent this nice clean table to me. And so if I'm following these instruments, I can simply go into my brokerage account, move my stop, adjust it to the new smart trailing stop prices, and just follow it like a mechanical system. So again, like a broken record, if you haven't went to the STS tables and set your favorites in email, make sure to do so. If you're viewing us on YouTube and you want access to this resource, subscribe to Breakpoint Trades and you can start receiving these automatic email notifications. Next. Image number 4, here's the UPRO. So the nice thing about the KISS systems too is we generate these live chart URLs that are dynamic. We have a charting software that we paid for that runs on a server. Our KISS systems populate the charts. So it's kind of like our own charting service. But here's UPRO from the KISS system, which is up about 40%. You can see where it went long. It draws a vertical line. It went long there in November 3rd. Didn't catch the bottom, but that's fine. The UPRO actually, kept you out of that decline that we had in the fall. Got you back in. You can see all the progression of the smart trailing stops. Current smart trailing stop is 55.60. So wildly profitable. It's neat to see those smart trailing stops ratchet up. It's kind of like life insurance for your portfolio or game of musical chairs. It gives you a chair to sit in versus just buy and hold and not having a stop and no discipline. When times are great, that works out, but markets eventually have corrections, and that's what's nice about the systems. They give you that exit plan, exit strategy. And chart number 5, here's Microsoft. Microsoft is reporting, I think, on Wednesday. So system went long here in the, can't see the date on this static image, but it went long here, and you can see how it's raised that smart trailing stop all along. So again, guys, utilize that resource, set your favorites if you're a subscriber. If you're not a subscriber, consider subscribing. All right, moving back to the general market analysis. So here's the index sector table, what transpired today. So again, nice gains for the indexes. The Russell led up 1 3/4%. Remember, I had a nice tight coil, inverse head and shoulder pattern I showed on the weekend, and I'll show you when we get to that below. Out of the 21 market sectors we follow, I said 20 out of the 21 were up. Actually, 19 out of the 21 sectors were up. And the ones that were down very small. So fairly broad-based rally here. Currency-wise, US dollar was flat today, essentially. Cryptocurrencies obviously had a nice day, as did the crypto stocks, such as Mara, Coinbase, etc. On the commodity side, we had some weakness. The index was down about 0.85%, largely caused by crude oil, which is a big weighting, down 1.6%. Remember, crude oil was up 6.5% last week, so it's fine to give it back a little bit. Natural gas down 5.5%. And copper up 0.7%. Some of the ags, a lot of these were down. Now, the precious metals had a nice day. Gold up 0.7%, GDX up 1%, so the stocks outperformed a bit. We need to see more of that. And as far as the bond market, nice declines on the 10-year and 30-year. Next. Item number 7 shows the economic news calendar, which I already discussed earlier. The FOMC is the big one on Wednesday, jobs report on Friday. But again, there's plenty of news from ISM manufacturing, the Chicago PMI, a slew of earnings. So especially the 6 big cap tech stocks over the next couple of days. Let's move on to the index charts. Image number 8, here's the daily chart of the Dow Jones, up 0.6% today. Just continues uptrending strongly. We still have that big MACD divergence, but remember, guys, MACD divergence is not a sell signal on its own. And it's just something to note. And we just remain in a strong trend. Maybe a little bit after we get through some of these earnings, then maybe the market will be set up for some sort of pullback. But for now, strong trend. Next. Chart 9, here's that weekly view of the S&P. Just showing this, again, it's only Monday, but showing this, we're tagging the upper portion of the channel still. Haven't busted through that yet. It's still a potential little resistance zone. Next. Chart 10, here's the daily view of the S&P. Again, just up, up, and away, Superman. Again, you can see the MACD there, lagging price. Now, if the S&P goes far enough, that MACD divergence will be negated. Okay? Otherwise, it's still there. We're above these short-term moving averages. I don't see any big correction here coming anytime soon with all the earnings, etc. Chart 11, here's the RSP idea I put out about a week ago. That's the S&P equal weighted. As you know, that's been lagging and it's been moving out of this flag pattern. I think this should make another high. Next. Chart 12, here's the KISS system for the S&P, KISS trend system. And as I discussed on the opening, look at the smart trailing stop. It jumped from 46.84 all the way to 48.23 today. So awesome jump there. Pretty tight, quite honestly. It could be hit pretty easily now, but system went long back here on October 31st. Initial stop at that time was 41.04, and it's moved it up all that time. Awesome seeing that move up. Chart 13, of course, here's that KISS system in 2019-20. Just a great example I like to show, especially friends and family, because it's just a nice example showing how it keeps you out of trouble. It was long. It got you out in February, 4% off the highs at 32.57. Then it went back long at 24.77. Then started raising its stop from there. So while the S&P got back to the February highs that year in August, when everyone else was break even, you were up very nicely because you went back in at the lows. But just a great example of the KISS system in action, what it does. Next, chart 14, here's the 4 time frames we like to follow. Again, guys, really nothing to say here. The ATR is your support on all these time frames. No changes. Next. Chart 15, here's a 2-hour view. And we have these big blank space on some of these intraday charts. As I discussed on the weekend, stock charts has some technical issue. It's not showing the moving average ribbons, which quite honestly pissed me off. It's still not fixed, but makes these charts ugly. But anyway, the point is we had an ascending triangle here. We busted out nicely and we continue up. Next. Chart 16, here's a 60-minute view. Again, just shows you that little tight ascending triangle that we busted out of nicely. Next. Chart 17, 30-minute view. Again, just shows you a zoomed in view of that little ascending triangle I showed on the weekend, which broke to the upside. That's what it favored. Next, chart 18, here's the NASDAQ triple Qs. This is the weekly chart. Someone asked me to explain this wave count a little more. So what you got here is a nested 1, 2, 1, 2. What that means is you can clearly see a wave 1 and 2 here, and then a 1, 2 here. So this 1, 2 in parentheses, this is a smaller degree count. So this pullback we had in the fall was a wave 4, minor wave 4. And then this new high that we're making is a major wave 3 of 5. So once this completes, whether it's in here or a month from now, I favor this as a wave 3 move, and then we're going to have an ABC pullback. Maybe we pull back to this area, which is now big support. That should only be a wave 4 pullback, and then we rally up again in new all-time highs in wave 5. Then once that happens, then we'd be set up for a larger correction after that major wave 5. But that could be maybe late in the year, maybe the fall time frame, perhaps. Next. Chart 19, here's the daily. Again, up, up, and away, higher lows, new highs, higher lows. What can I say? Next. Chart 20, here's the KISS trend system. No new smart trailing stop on the Qs, unlike the S&P. So should we have another pop tomorrow, I wouldn't be surprised if we see the smart trailing stop jump up nicely. Jabber 21, here's the 4 time frames again. Like a broken record, nothing to say. ATR supporting all the time frames. Remember on the weekend I talked about the 78-minute was right on the ATR, and you can see the support cycle dots that are being kind of covered up by the ATR, but you can see it. We rallied right off of that. Next. Jabber 22, here's the 30-minute cues. Again, apologize for the white space there. It's stock chart's not showing the ribbon, but we had that wedge ABC pullback, and we broke out of that, which I favor. Lastly, chart 23, here's the 15-minute chart. So this kind of shows that wave count we've been looking at on a smaller time frame. So this is also a nested 1, 2, and this pullback I favored as a wave 4. We're now moving up in a wave 5. So this should theoretically go higher and take out these recent highs. Next, moving on to the IWM small cap. So here's that 60-minute chart I discussed on the weekend. I showed this tight coil. I discussed this potential inverse head and shoulder look. Awesome break from that coil today. Look at the volume expansion. So this should at least now test those December highs up in here in the 205 range. Next. Jabber 25, here's the daily view, of course. We've held that 9 EMA on those recent pullbacks, now taking out that trend line. Finally, Jabber 26, there's the monthly view. This is your longer term resistance up here at 205.50. Well, that does it for the major indexes, guys. Futures are slightly up tonight as well. And let's go ahead and move on. Jabber 27, here's the VIX. The VIX was interesting. It spiked all the way to the 200-day moving average today in the morning and then pulled right back. Next. I'm not going to go over all these indicators. Some of these indicators have some divergences, such as this NYSI McClellan oscillator. We're making new highs on the S&P. This is not. But again, divergences aren't sell signals. But if the divergence stays in place, a week or two from now, maybe that'll set up for some sort of pullback after that. Next, moving on to the market sectors. So here's energy, XLE. This area was down initially today, recovered quite a bit. XLE closed almost flat. Jabber 30, here's oil services, still in the downtrend channel. Recovered off the intraday lows, retesting the 200-day moving average and downtrend channel line. Jabber 31, here's the weekly view of oil services. Again, I love this chart. You can see the long-term uptrend line from the 2020 lows. If we can clear this area and start, that could set up the case to rally to here. And up here, you got a huge thin zone. Why is this a thin zone? It's like an air pocket. If you look at your volume patterns, notice this is your smallest volume patterns. That means this area is almost no risk. So if OIH can get up into this area, I think it melts up to the 420 area. So it would be a nice swing trade. Jabber 32, XOP, oil, S&P oil and gas expiration. This also recovered today. It's still in the same little wedge pattern though. Jabber 33, ExxonMobil. Again, this was a long idea of ours over a week ago off these doji candlesticks. It's been an awesome trade. And guys, this is a great example of trading. And trading is not always about, it's not about knowing exactly where the direction goes. Again, hopefully you're right a lot of times, but it's about finding areas where you have a good risk reward, where if you're right, your reward is much larger than your risk. So this is an example where you go long 1 penny over the high of that doji, put a stop 1 penny below that 95.77 low. It's very tight. And now with that move, you've made at least threefold more than you were risking. That's what about trading is, finding areas where you can have a logical entry and a tight stop. It's not all about having a crystal ball and knowing 100% what's going to happen. Okay? It's about discipline and a plan and executing upon that. Jabber 34, Chevron. Again, this has been a nice move off that demand zone so far. Jabber 35, VLO, Valero Energy. That was a new one I gave on the weekend. So you can see today it pulled back, retested that previous resistance, which became support. This is my initial target area, the supply zone up in here. And Jabber 36, NOV, another one I showed in a weekend. You can see nice recovery today off that 9 EMA. First target would be the highs at 21.75. Moving on to some other sectors. Jarbert 37, here's IYT Transports. Like I said in the weekend, has a cup and handle look here. Up today, testing the neckline of this cup and handle. Jarbert 38, XLF Financials. Again, this area continues to do very well. Jarbert 39, the bank sector, up as well. There's an open gap up here, which is likely a magnet over time. Jarbert 40, XLP, Consumer Staples. I showed this little pattern on the weekend, starting to break out of it now. Let's move on to the bond market. Jarbert 41, high yield corporate, still in this coil pattern. To me, this looks like a fourth wave coil. I do favor a move out of this, possibly to another high. Now, if that happens, then we're going to set up some MACD divergence. So you'll see on the MACD, but this does look like it wants to break out. Next. Jarbert 42, there's the S&P versus high yield corporate. We still have that divergence in place, so it's still something to watch. But should high yield corporate break to a new high here, that will erase that divergence. Next. Jarbert 43, here's the 10-year Treasury yield. Nice pullback today, but again, we're still in this channel for now, so it could still hold that theoretically and work higher to some of these fibs. But we'll see. That helped the market, obviously, today in precious metals. Jarbert 44, here's TLT. Remember on the weekend, I showed this tight downtrend line. We broke out of that today. Could have been a long trigger. If you went long, I'd put a stop right around that 93.10 area. Jarbert 45, here's the 2-hour time frame. It showed this nice clean channel. So I pointed this out in the morning to our subscribers. Could have bought that gap out of the pattern. That's moving up nicely. Jarbert 46, here's the bigger picture view of TLT. Again, it's had a nice rally off the lows from October, but because we had a fifth wave low there, I think it's going to spend much of the time this year in this ABC move. So while it's pulling back, it pulled back here a little bit this month, I still believe it's going to work higher to complete this A, and then maybe we finally get our pullback in the market on this B. Remember, rates move opposite of bonds, so on this little B pullback, we get that, rates would move up and maybe that would spook the market a bit. But then should form a higher low, then go up again. Next. Moving on to commodities, Jarbert 47, DBC. Like I said, a lot of commodities were down today, especially the energy area and some of the ags. Jarbert 48, there's the monthly view. I do like the monthly longer term view. I like how this is consolidated. But remember, this is a monthly chart, so it may take some time to finally break out of this consolidation. Jarbert 49, crude oil, as you know, broke out of that coil. Nice pullback today. Again, logically struggling here around the 200-day moving average. Closed above it Friday, closed back below it today. So we'll see what it does this week. Jarbert 50, here's natural gas, continues to be weak, down another 5.5% today. If it really sells off here, it could go all the way to this long-term support, perhaps down at 150. They call natural gas the widowmaker. It's very tough to trade. Jarbert 51, copper, rebounding a little bit today. It's hard to see here, but you kind of have a bull flag look to it right here. Jarbert 52, DBA, pulling back a little bit. 9 EMA is your current support. Remember, it broke out of this pattern recently. I love the weekly charts. Take a look at that. Jarbert 53, there's the weekly view. So what you got here is a potential big cup and handle. So this could be a potential swing trade with a stop in place. Next. Jarbert 54, URA, uranium. Nice recovery today. If one is long, I think you can put a stop right there at today's lows, a little bit below it. And if you can break out of this flag, you can see the volume was picking up, then I think you can add to the position. And why do I like uranium so much? Well, I'll get back to that in a minute. So here's CCJ. You have the same type of pattern. CCJ is the major uranium stock. Jarbert 56, this is why I like uranium so much. This is the monthly chart. Bigger picture view. I don't know if you guys have read Stan Weinstein. He put a put out a book back in the 90s called what the hell's the name of it now? Profiting in Bull and Bear Markets or something like that. But it was a famous book. It's very simple, but in his book he talked about looking for basing patterns. He talked about stage one, stage two, stage three, stage four cycles of the markets. And this was a classic stage one basing on uranium. It was basing for 5 years, finally broke out. That's where I became bullish. You had an initial move up, consolidation into a coil over the last couple of years. We broke out of the coil last year. It's been moving up. My target is up here in the 40s. That would be an excellent percentage move, especially from that coil entry. Next. Driver 47, Bitcoin. Again, as you know, Bitcoin had that nice pullback from the divergent high with the Bitcoin ETF news. Buy the rumors, sell the news. Bouncing back quite a bit. As far as the individual stocks, they've given some nice trades. Here's Mara. I put this out as a long idea about a week ago off this demand zone. It's giving you a nice trade. Pulled back today off the highs though. Driver 59, here's Mara on the 60-minute time frame. The reason why we liked it, and guys, this is what you should always zoom down to a smaller time frame. If you're looking at a daily chart, zoom down to a 60-minute and 2 hour. Those are excellent time frames to look for additional patterns. So what you had on a 60-minute chart, you had 5 waves to the downside. Whenever you have 5 waves, either down or up, you look for a reversal. That's a powerful pattern. You had 5 waves, you had negative divergence. So that confirmed going long. I talked about a stop setting it at that higher low, 54.50. And now you could likely move the stop up to here, this next higher low. Next. Driver 60, here's Coinbase. Nice rally out of that wedge. I'm sure Kathy Woods is happy. Driver 61, US dollar. Made it up to about the 50% fib, pulling back off that a little bit. If we can start getting a bigger pullback on the dollar, that'll help precious metal area. Let's look at that. Driver 62, here's gold. Again, up today. We need to see the stocks outperform. Like I said, got a little bit of that. We need to see more. Okay, this area is notoriously difficult to trade, as you know. Driver 63, silver. Here's the daily chart. Again, this is your bigger pattern. We've been kind of ping-ponging between this big coil-like ascending triangle pattern. Driver 64. I love the monthly chart. That's the better way to look at silver. You have a big 4-year coil essentially sitting up here. Again, this is a monthly chart. Each candle is 1 month, so it could take some time to break out of that. But when it does, it could be a powerful move. Driver 65, GDX, weekly view. Again, remember, it got down near the bottom of the coil. We're seeing a little bounce back. Driver 66, here's the daily. Again, still not a lot to say about the chart. Kind of a blah pattern, quite honestly. Again, the gold bugs need to show us something. All the gold bugs seem like they converted to Bitcoin bugs, quite honestly. Driver 67, here's the 2-hour GDX. So far we have some higher lows in here. We'll see if we can build upon this or not. All right, guys, let's move on to our trade ideas. I already discussed the energy names. So ALPN was a long idea I put out last Wednesday or Thursday. Triggered, the trigger was it was a Momo play. Came on my volume scanner. So your trigger was at 22. Hell of a move on Friday, and it was up again today. Again, this was supposed to be just a Momo play, not a big swing trade. So make sure, take some profits, tighten your stops. It's not meant to be a holding stock, but it's been a heck of a trade. Driver 69, PTLO was another one from last week. You know, with a lot of things at new highs, this was an oversold play. Again, this is an example. You had a very tight entry here, 1350, very tight stop at the low. And it's moved up nicely. Driver 70, RVSN, what can I say? This was a long idea of mine last Monday. And look at this thing. I hit 18s today. I was not in it. I sold it last week. Should have kept some shares. I hope that some of you kept some shares. But if you did, don't get complacent. It's way outside the Bollinger Bands. take some profits, move your stops. Do not give this move back. Driver 71, NVIDIA. Again, we had this long idea back in early January out of this symmetrical triangle pattern. Just continues up, up, up and away. Just trail your stops up just right below the 9 EMA. You just want to stay in the trend, or you can check the KISS systems. You can see where its current stop is at and use that. Next, Driver 72, here's Microsoft, same deal. Beautiful trade out of this symmetrical triangle. Up, up, and away. You could also see where the KISS system is suggesting a stop, or you can use the 9 EMA. Driver 73, SMCI, another beautiful trade of ours from January. Driver 74, JETS ETF. Again, this was a perfect ABC pullback. Still long some, I'm just trailing a stop up. Guys, just very simple. First off, we had this long idea back in November, this oversold, and that was a heck of a trade. But guys, when you're uptrending, these 3-wave ABC pullbacks are your friend. I look for ABC pullbacks and uptrends. Those are what you want to focus on buying. Driver 75, Hershey, it's been on the list for a while, this coil pattern. And here's another example. I talked about going long near the bottom of this coil because you could have had an extremely tight stop here. It's now moved to the top of the coil. That's an example of, trading. I didn't know if it was going to rally off here or break support, but I was willing to take a shot there with a tight stop. Now let's see if it can bust out of this pattern finally. Driver 76, here's a 60-minute chart or 2-hour view. Like I said, zoom down to the smaller time frames if you're looking at the daily. So again, you can see that initial stop here. I now move my stop up to here, the next higher low. Volume's picking up here, so I'm hoping this can now rally nicely. Driver 77, BABA, was down today, still in the channel. Driver 78, BABA on the weekly. I do like this potential wedge in the weekly. Definitely had a hell of a correction from the 2020 highs. Driver 79, EXC was another long idea from last week, was a double bottom play where you could have a stop right at the lows. Nice move up. Now it's over the 9 EMA. Next target's the 20-day moving average. Driver 80, CX, cup and handle from last week, continues moving higher. Driver 81, NVEI. Here's a new one from the weekend. Kind of a little tiny inverse head and shoulder pattern. Price rallied off the 50-day moving average. I bought a little bit today. Where could your stop be? Well, the widest I would have it would be this higher low at 22. You could probably put it around here, Thursday's lows. This would be my target range. This is your next supply zone. Driver 82, Lab. It's been on the watch list for about 2 weeks. So still in this little pattern. So if you're long, I'm long a little bit. My stop's right here. If it breaks out, then I may add to position. Driver 83, Rivian. Nice move off this demand zone. This is the long idea I put out last week. Testing the 9 EMA now today. Driver 84, Daku, new one from the weekend. Hasn't triggered. Hasn't taken out resistance. This is another example. Could have also went long here today with a stop below this trend line. Driver 85, TSBX. This base pattern, I'm still monitoring it. I'm not in a position, but I'm watching for a trigger. Driver 86, Black Diamond. This has been on the list for a while in this sideways rectangle pattern. Testing the resistance today, pulling back off it. That confirms that is resistance. Driver 87, TO. This one's been struggling here a little bit. Hasn't been able to confidently break out of here. It's still valid for now unless it loses that support. Here's some new ones, guys. And with today's big move in the market, really hard to find consolidation patterns. So most of these are just Momo plays. So here's one. It would be over today's highs. High was 197, so over 198, $2 could be a trigger long for a quick trade. Driver 89, PTGX, another one. So the trigger would be over today's highs, and this would be your initial target zone. Jarbor 90, ABUS, another one, big volume pattern, big candle, but over today's highs, you could probably get a trade out of it. Now, guys, on all these Momo plays, the other thing I do, I'm not showing it here, but I look at a 15 to 60 minute chart. And if I don't see any divergence or it looks like there's a flag pattern, I'll put it out. But I look at those time frames because if it looks tired on a 60-minute chart or there's some divergence, I won't put it out as a Momo play. Okay. Jarbor 91, the final one, IHS. Here's a small stock, kind of a wedge pattern. Obviously, it's been really hammered since the summer time frame, $10 all the way down to the 4. Get a nice pickup in volume today, kind of a wedge. So could be low risk trigger over this trend line with the stop at the low. All right, guys, that'll do it. Have a wonderful rest of your Monday night. Thank you for all your support from Breakpoint Trades website and, of course, YouTube audience. Take care.